I'm just going to use this for an example of a structure that you could use. 60% into an ETF, 20% into individual stocks, and then smaller percentages into the more speculative things, the more risky things, the options, the short squeezes, the things that you're not ready to make a dedicated commitment to long term. And then, of course, having some buying power in there so that you can keep up with your investments on a regular basis. Let me start off with sharing what I'm doing as far as retirement. I have my retirement accounts at Fidelity. One of my investments that I do there is a target dated fund. It is a way that you can have simplicity in your investing. So you choose a fund. They come out in 5-year increments. I'm going to use 2045 in my examples here today. It's a portfolio that is structured that will give you an automatic adjustment to the allocation of the mix of what you're invested into as you get closer to your retirement date. So with this, just like we've talked about in the past, ETFs and index funds give you simplicity and diversification. This also gives you the added bonus of automatic rebalancing. Now, with any type of investing that I get into, I want to make sure that I keep an eye on it and I know what the performance is and that I've made the right choice. So there's nothing that I'm ever going to say is a totally set it and forget it. I want you to be mindful and keep an eye on your portfolio, even if it is predominantly things like this, a target dated fund or an ETF. But you have to be realistic that this is a long-term commitment and there will be ups and downs. I am invested into this particular fund. It's FXAIX. It's a 2045 fund, and you don't necessarily have to pick a fund that corresponds to your retirement age. I wanted something that was a little bit more heavily into stocks as opposed to bonds and things that are a little bit more conservative. So I went with this particular fund. I contributed, back then it was a 401k. I contributed $38,000 while I was there during my years with that company. And my return has been over 90% into this particular fund. And this account is now basically almost doubled. I contributed 38 and it's grown 34,000 over the time that this investment has been in place. I like to share this because I want people to realize you have to keep your money invested, especially nowadays with changing companies and having different 401ks in different places. You have to make sure not to withdraw that money. If that money, the intention was to be retirement, we got to keep it invested and growing and building. What do you think about this type of fund?
I think I like it. I was reading it as you had it on the screen. It could be for anyone, for real, but especially someone who wants to take the guesswork out of choosing what to invest in, because it's basically doing it for you. I would still also encourage you to actually learn about these other companies and invest on your own on top of doing that through your employer.
I'm doing that too. I'm going to go through all of it. I think I do a little bit of everything, but that is something that I do. And if that's all you do, I think that could be a start for someone that doesn't have a retirement account in place, doesn't really know about picking stocks, as well as how we've discussed ETFs and index funds. That is another way to give you simplicity in a fund, a managed fund. But with that, you just have to be mindful of the fees, be in tune with the growth of the portfolio, and you have a somewhat easy, safe way to get into investing, because I think everyone needs to be investing. My next one, I'm still in my retirement account. I've been doing 100% into S&P 500. And this is also at Fidelity. There are many advantages of this. It gives you broad market exposure and diversification. So this screenshot is from a video that I did at the beginning of the year where I was up 9.97% on my investments into FXAIX. It has a low expense ratio, lower than VOO, which is another option that gives you exposure to the S&P 500. And I just checked when I was getting ready for this live, and I see that I'm now up 11.89%. So the S&P 500 has been going up over the last few weeks. I've seen in the news quite a few times that it's hit an all-time high. And with this investment, I do get a quarterly dividend. I'm having my dividends reinvested. So that just continues to help me to build up my positions faster. So now back to the screenshot that I showed earlier, the way that Prez was talking about a structure on how you can build your portfolio. Now, like I said, if all you did was do investing into a group of stocks or a target dated fund, that is a start, and that could be your start and your finish. That could be your way of investing, end of story. But I've decided to do more than that. And I've decided to build some investment portfolios on my own. And my reason for that is that I can touch them before the normal retirement age of the 59 and a half. And I also wanted to take on this job for investing on my daughter's behalf. So this is Keenan Grace. This is his structure that he shared within his Discord. And I use it as like a guideline. And I just want to show you guys as an example of a way to build a portfolio.